this class, or this week's class, on patterns. Today's pattern we'll be covering is something I would call or refer to as the base, and I will go into that kind of shortly. Before we get going, we're just going to go through the good stuff, the disclaimer. Spread betting, forex, and CFD trading carry a high level of risk to your capital and can result in losses that may exceed the initial deposit. Trading these products may not be suitable for everyone, so please ensure you understand all the risks associated with trading. Information and comments provided here under no circumstances are to be considered an offer or solicitation to invest, and all information provided believed to be accurate to the date the intentions produced. Nothing herein should be construed as investment advice, and information provided within this room is the personal opinion of the moderator and not Tradimo. This content does not constitute financial investment or tax advice, and Tradimo does not accept any liability for the content of the comments made during this session. So today's class, as I said, we're covering patterns. What we will do, I'm just going to get rid of this and bring up a chart. So what we're looking at, I'm just going to try and find an example here for you guys first and foremost. It doesn't matter. Okay, we've got a nice white space. So the base, as I refer to it, or the base trade, it's very, very straightforward. Okay, it can either be used as a counter trend or as a confirmation pattern to enter at a key level of support or resistance, or yeah, that's it's a valid pattern. We're just referring to, sorry guys, we're just going back quickly. This, it's still a valid, it's a valid Gartley pattern. Okay, it's one, the Gartley is one of my favorite patterns, by the way. Does that help? It's a retracement pattern. Okay. Yeah. So right. So sorry. Back to the patterns. We're covering what I call the base pattern, and it's very, very straightforward. It can be used as either a momentum-based move or pattern to kind of get involved in a trend, or which I kind of use it more because I trade levels of support resistance as a confirmation before kind of just entering directly at a level of support resistance. Maybe just use a point of reference as a confirmation. Okay, so very straightforward. What is we have price either moving up or down. In this case, let's say we've got an up move and price moves up into a key level of resistance. Okay, now this key level of resistance would be found from a higher time frame, daily, 4-hour, even an hourly chart. However, the pattern itself, it can be traded on anything from a 5 minutes in what I'm going to show you now as a confirmation pattern, as a reversal between the 5 minute and even up to the hourly chart. I would use it as a reversal pattern. But it can be used as a momentum-based pattern on any time frame. But in terms of the way we're using it here, price moves up into a key level of resistance. Okay, so we have, let's put this in here. We have a level of resistance up here. Price moves up, it hits the level. And it's at that point when I will then look at the smaller time frames, okay? And what I'm looking at is for the pattern to form. So let's say we've now moved down a time frame. Price does this, okay? It kind of sits and does this sort of thing here. A little bit of a consolidation. And it then, so this is the consolidation here. And it then breaks down, okay, below this area, right? So what I'm looking for at that point is for price to come back and then retest this consolidating range here. Okay. And very often what you'll find is you'll have something like this, is with prices kind of shifting up. You have maybe a 3 drives or something like that coming into the level, then consolidates like this, and then it breaks below the level. So now you have this price flip area. So either just a single base area here where price is closing below, and then you're looking for a pullback to retest to enter the market short. Okay, so you'll either just have this consolidation area where prices hold as a resistance, then it's support at the base, price flips and it becomes resistance again. That's what you're looking for. Okay, or you may have a previous run here where you have support, and it may be a Quasimodo pattern, but it doesn't have to be. Okay, it doesn't necessarily have to be taking out any swing low points or anything like that down here. It's more just this consolidation phase, this range. And the nice thing about this is it can be used as a confirmation point to get into the trade. So you're looking to enter here. Now you've got all of this to kind of use as a protection point for a stop loss. Okay, so you can really use this as a confirmation point, and you have some reference to place a stop loss. So hopefully that's straightforward enough. On the flip side is if we had a key level of support from the daily, 4-hour, or even the hourly chart, and price comes down to the level. So in this case we have support. Okay. Then rallies and we get this base. So when I get that bounce, when I get this move down into support, then I'll look at the smaller time frames and then look at this consolidation once again. Okay, and then for price to move up, so it needs to break this swing high. So it's this range here, this consolidation, and then I'm simply just looking for this pullback to give me an entry into the market. Okay, so that's the entry point, and then we have a point of reference for a stop loss. Make sense, guys? So we're using this consolidation as confirmation that the support or the resistance level is holding, as well as a clear-cut point of reference to place a stop loss. Okay. So let's just kind of have a look around and see if we can find some examples. I haven't had a chance to actually go and physically look for some picture perfect examples, but let's just have a look at these sort of areas here. Let's say we've got price coming up, finding resistance, and this is an hourly chart up here. So instead of just entering directly at the level, I can then go and have a look on the, let's say, the 5-minute chart, and very straightforward. You see here, so we just had this alarm go off here, guys. So there's the alert. So if you guys are watching, I know some of you guys are watching this, so we can get our risk out on this trade, okay? Or if you wanted to, you could have taken profits because that was worth now 13. You can see it spikes and it rejects immediately there. Sorry guys, I know we're diverging here off the topic, okay? So, and obviously now we're looking for a little surge up about 22 pips. See the resistance holding, okay? So I can now shift this alert up here. That'll be the take profit, but the risk is out of the trade, okay? sorry, so back here to the base. So we have price shifting up into resistance 130, or in this case 139.05 area. Okay. And you'll see how we have, you know, this kind of three drives up. 1, 2, 3. Then pushes higher. So if you're not keen on kind of selling directly at the level, okay, maybe you're not that confident about it, you're wanting some sort of confirmation. Maybe, you know, this wedge or three drive pattern, whatever the case is, maybe that's, you know, not for you either. We then have this range. So you see in this instance here, we build a range, okay, consolidate, price breaks up, it then hits resistance, and it comes down, uses the level as support. It then does the same thing again, see the range, but price breaks to the upside once again, so the buyers are still in control. It then forms another range, okay, and now price breaks down. Now I can either look at this smaller range, and importantly, when you're marking these levels up, I mentioned before, but obviously if you're new, you may not have heard me. This area here, when we're marking up this area, make sure you're referencing the actual candle bodies and not the wicks. Okay, the wicks are just noise. I'm not interested in that. Okay, so that's the base there. Now, in this case, we obviously had this smaller base area here. So depending on the size of the distance, I may, in terms of the confirmation, look at this overall swing here. Okay, so I would be adding on, so let's call it 10 pips versus 7 pips. Okay, and that's really going to be dependent upon obviously the size of the range. If these are like massive ranges, then adding on, you know, into the slightly larger range may not be, in terms of risk, it may not be a worthwhile trade. But if you have a look at this on the left hand side, this is where I remember the example we looked at, the theory part. You see how we have this area here, the spike as resistance, and it then flips to support, and we got this consolidation. Then price kind of steps up again and uses this base, and then we break down. So remember, we at the key level of resistance. Now price starts to break down. So what I'm looking for is I'm looking for a pullback to get short. Okay, so in this instance, we're either going to look here or here. Now, because there's only a 3 pip difference between the upper range and the lower range, I could look at a sell limit here at 139.00, and I have a place, a reference point to put a stop loss. Okay, so if we just look at this, you see price spikes up, and initially it hits the first level here, and it reacts about 5 pips, 4 pips, something like that. It then pushes deeper into the higher block. Okay, and you'll see in this case how we have, you see how price pushes up. Let me just get rid of these arrows here. You see how price pushes up here, and then it just kind of drops off, and then we get a deeper push up here like that, and then we drop down again like that. You see how the Quasimodo or the head and shoulders pattern would actually complete over there. Okay, so it's not always, well, it's not the same, necessarily the same pattern. Okay, you could look at the Quasimodo, obviously in this case you spike, it doesn't make it. But in terms of the base, in this case we've got 2 bases, one within 3 pips, the lower range would probably be worthwhile. So that's my entry on the retracement here, with a stop loss above this high area here. Okay, whereas previously, if I just got into the trade, let's just go back here, if I was just looking to trade off this level here, my stop loss, the first real place of interest, you know, where I'd probably consider a stop loss to start the trade, would be above here. So, you know, at least kind of, let's call it 30 pips of risk initially, versus now on the 5-minute chart here, I can enter there on the arrow with a stop loss above here, and I'm maybe looking at, you know, 15 at a max. Okay, so now I've like basically halved my risk that I would initially have. Make sense? Okay, so it's a way of getting into a trade as confirmation. You trading a higher time frame level, so you can always look for, you know, something better. You can always target something else, like, you know, a high time frame level of support, resistance, whatever the case is. So let's have a look at another example and just see if we can find something that stands out. Let's try and find you guys one with just have a look at the 4-hour. Let's just say we want to find an area up here. Okay, so this is a 4-hour chart. We've got sort of a nice price flip here: support, resistance, support, resistance, resistance. Okay, now let's say this is the sell zone here that we've identified to possibly sell from. Okay, in terms of placing your stop loss, we don't really have anything on this time frame anyway, where, you know, I could without a doubt say, yes, that's where my stop loss should at least go to start the trade if I'm going to look to trade from this level. I don't really have, you know, a predominant area, maybe on the smaller time frame, but on this time frame, the only major sort of area here would be all the way up here, and that's, you know, it's over 100 pips away. It's not something that it would interest me. So if I go down, let's have a look at the hourly chart. Okay, so here's the hourly chart. Price hits a level, okay, and it builds a range. Now in this case, obviously it absolutely plunges off. We obviously don't know that in the, you know, when this is happening, but let's investigate this on a smaller time frame and see. 15-minute chart, and I think the 5-minute, if it brings it up, we'll see what I'm talking about here. So you'd see how we've got this area up here, and we've got this nice clear-cut range as base. Okay, and this is happening at a key level of resistance. Then price breaks away, and in terms of looking to enter, I can then look at getting in here with a limit sell order and a stop loss above the high. So I'm now looking at risk of maybe, you know, 10, 11 pips, somewhere around there. Okay, price hits the level, taps it out, taps it out, taps it out. You may very well have been stopped out on this before it breaks down. Okay, that's just the way it goes. If not, maybe at a little slightly richer stop, I probably would have been stopped on that trade if I'd taken that, and it probably would have hit me by a fraction of a pip or something as well. But maybe you put in a, you know, whatever, 15 pips, whatever the case is, each their own. We just, you know, we're building on the idea of what we're looking for here. Okay, so we're looking for a range of some sort of consolidation. So we look for a move up, consolidation at the resistance area, and when we're looking for a breakdown, so we're looking for that resistance area to hold. This is the confirmation, okay, that we're after. Right, let's have a look at another let's have a look. Actually, I don't want to look at the euro. Let's have a look at the dollar yen 4-hour chart. So we've got this kind of area in here of resistance, this base in here, consolidation, chop off the wicks there. Okay, now that could be an area that we'd be looking to sell at, and this area down here, see the range here, this base, chop off the wicks, that could be a level that we want to look to buy at. Okay, so we've got two potential areas to do business at. So the question is, will you take another entry? Personally, I wouldn't. If I get stopped on a trade setup, you know, something like that, or a pattern, I'll just walk away and look for another opportunity. Because what you find is, you know, especially if you're watching lower time stuff, it's very, very easy to get sucked in to watching price, and it, you know, if the market doesn't kind of react the way you want it to, and you get stopped out, depending on how you handle it, you may get, you know, a little bit upset, and you want that money back, and it can lead to overtrading, and overtrading will literally kill your account faster than anything else. So I think I would say don't take more than one entry, because what that will do is it'll give you the patience and the discipline, obviously the discipline to walk away, and the patience to wait for something else. And what that will do is it'll kind of just let you have time to clear your head. Yeah. You're not going to get every move in the market. It's not going to happen. Okay. Now obviously, you know, it's different. So if you find that you know, are comfortable and you can confidently take another trade setup if it produces the results, I would not go and take. If we just go back, let's just go back to that euro yen trade here. So let's say you see price comes up here, it spikes us out. Okay, it spikes us here. I wouldn't go and take, you know, another entry off this old range. If price built another consolidating range here, so you see how it built this range over here. You see it's built this consolidation. If price broke out of this consolidation and came back and it retested the level, so it did something like this, that's a new setup. Okay, I would still consider taking that trade, because the risk on the trade would then be, you know, above this area. So the risk is, you know, pretty small, but it wouldn't be based on the previous setup. Okay, does that make sense? There must be a new trade setup. So let's just go back to this dollar yen. Let's just investigate these areas here on a smaller time frame. So I'll just find these areas quickly. So 30. Okay, let's have a look at the 5. Okay, so here's the 5-minute chart. Okay, and we're focusing here on this top line, the top resistance area here. Okay, so price grinds higher, we get this drive up. Okay, and once again, you see the consolidation, price breaks above, takes a move up, consolidation, price breaks above. Okay, and then eventually we get this larger base getting built. Okay, So we essentially have something like this and like this. Okay. So once again, you see I'm chopping the wicks through here, this area here, and I mean you could even look at this little range in there if you wanted to. But we've got a range of about 7-8 pips, somewhere around there. Okay. So you see when price breaks out of here, closes below. If price then comes back to retest the area, my sell limit would come here at this 101.67 area. And my stop loss would go up here just above the high area. Okay. So now I have an entry point and I have this base here to kind of act as some sort of level of resistance. Okay. So we move this forward, you'll see a price kind of spikes into the level and then it does this. Okay. So it starts to move in our favor. And you see the drawdown and this is, it's pretty small. It doesn't always work like that. As you saw in the previous example, we did get a kind of a spike up. And your Quasimodo in this case would be up here. So this would be the left shoulder, this is the head. Break the lower low and then a spike up here. Okay. So we get a nice entry short on the 5 minute off the 4 hour resistance area. And now we move it down. Let's just step this forward. So here we spike into the 4 hour support. So we're looking for some sort of confirmation, okay, some sort of consolidation. Now you see this can be a little bit on the aggressive side, but I've taken these and they do work. So instead of having, in this case up here, we get quite a heavy consolidating range. You could also look at just this area here. You see how we have it being really just 2 candles. So you have I'm referencing this white candle and this black candle. You see this bullish candle close above the range. So you could look at a retest there with a stop loss below here. That's going to put around 5-6 pips, somewhere like that. Okay, that is an option. In this case, you see price, it does actually respect it. See the close comes right back, feeds into that area, and then we start to drift up into the first level of resistance. Okay, that is a valid trade setup, just a little bit more aggressive. So you're not waiting for the larger consolidating range like this. And this is really it's going to come down to to your personal preference, what you see easily. And as I said, with everything I do, you've got to go and do the back testing for yourself and make sure that you're happy and understand what you're looking for. So in this case, obviously that was the turning point, and now we start to move up. Okay. So these are the base that I'm referencing here, or coming off key levels of support resistance. That is how I've used this method as a reversal pattern, as confirmation, okay, for stop placement and entry. You can also use it in the middle of a move as a momentum based strategy. Okay, where we have price trading in a range, it breaks above the range, and then we look for a retest of the range. Okay, so that is also an option, but obviously there's some rules involved with that, and this being a 5 minute chart, I'd be a little bit more cautious. Okay, you see like this down here. You see how we have, I don't know what the high time frames are doing, but this is possibly a nice level of resistance. We have this range being built, okay, chopping off the wicks. We close, you see this little bullish candle, closes above the range, it wicks back on the next candle, and then we take a move up. That's a momentum based method. Okay. These other ones are momentum based, but they're not trading, you know, with current flows. We're looking for an actual market reversal point. Okay. Is that making sense so far for the guys obviously that are live with us? So let's have a look at some other examples. Let's have a look at that that Aussie dollar. Remember we looked at this, and I've absolutely no idea if the pattern existed or not. So we'll just have a look. So we identified this level, this key level of support here a few days ago, right? We had the 886 retracement of this upswing on the daily, Quasimodo completion point. Let's just have a look at the hourly chart. So we come down, we build a base here, okay? But what you'll notice, and I said when I started this, you could use this in any, you know, any time frame you wanted. You see how in this case we have a nice consolidation range, but we don't really get a nice breakout above the range. We get a little false breakout, and obviously we drift straight back in, and then we use the range as, you know, partially as resistance. So that's not really helping me much. If we look at, let's just go to the 5-minute chart, and as I said, you've got to kind of be comfortable with the time frame you want to find these patterns on. Okay, here we have an example. So price comes down, it feeds into, see this V spike, this V bottom, it spikes through into that key support level, and it then consolidates here. Okay, then it breaks out, and you very simply, you're looking to get involved here on the retest. Okay, and just have a look at the left hand side. So you've got this level of support, then becomes resistance, closes above, pulls back, and it finds support. Okay, that's your entry. Stop loss placement comes in here below this low. Okay, in this case obviously the base is after quite a big spike here, but we kind of, you know, we move through this area a little bit. Maybe you get, I don't know, something off here. It doesn't look overly exciting. Then price comes down, another leg down, and it kind of builds another base here. Okay, closes above, tries to use it as support, then closes below, it uses it as resistance, possible warning sign for you. Otherwise, it stops you out. Okay, this one risk-wise is about 6 pips. Okay, price comes down again, kind of very, very choppy around this area here. Difficult to kind of be saying, you know, where I'd be looking to trade in this. And what you'll find, let's just look at the 15-minute chart. What you'll find with these things is when they're occurring in real time, they're normally a lot better. Okay, and here's a nice example here actually where we have, you see we've got this range, nice decent size range. Okay, and in this case, remember we covered this on already. Here's your Quasimodo pattern. Here's this range. Okay, remember we're chopping off the wicks here. Price breaks out and then it comes all the way back. This is quite obviously a long retest, not really a momentum retest, is like a swing retest. But nevertheless, the base, the consolidation base as a reversal pattern holds. Okay. And let's just have a look at the, I don't know if there was a resistance up here somewhere. So we've got a possible resistance area here, kind of in this level here, a bit of chop through here, chopping off those wicks. Price obviously takes a leg up, and if we just have a look at the 15-minute chart here, so you see how we kind of grind higher in this 3-drive wedge formation, okay, but we build like a range, okay, we build a consolidating range in here, and this will take, you know, it may just completely stand out to you and be really simple. Other times it's going to be a little bit, you know, a little more difficult to see. But if you just chop the wicks off, it gets rid of a lot of the mess. You see this consolidation, this range, it holds as resistance, then price closes above it, uses it as support, okay, it then breaks and closes below, and then we wick back. So as confirmation to get in, there's your confirmation. Your stop loss is coming up here somewhere, okay. Then we get another one here, also choppy if you look at the wicks, but if you remove the wicks here like this kind of thing, we close below, okay, and we're looking to enter here on the retest. Once we close below, it's not very convincing close, stops kind of above the top end. Make sense, guys? And it, you know, as I said, the more you kind of watch price, the more you'll get a feel for, you know, the ones you want to be taking, the ones you don't want to be taking. Real-time spot building at the moment. Which pair are we looking at? So the first thing I want to do, okay, before you start looking for patterns, is find out where we're trading, right? So once we know where we're trading at, we can then possibly add a setup, okay? So the first thing we want to identify is the level. We've got this area down here, the support area here, okay? And if I can give you guys a little tip, okay? You're going to have levels of support resistance, you know, marked up. And obviously, you know, your levels may vary from mine. But in terms of entering, okay, in terms of entering, it doesn't matter how you enter, whether you want to trade a limit order off a level, or if you want to, you know, get in with some sort of pattern. Try and make it a rule to enter as close to the level as possible, okay, as close to the source as possible. And you'll see with all the patterns that I show you, in terms of most of them either retracements, so I'm waiting for something to react to the level and then getting in on the retracement like we did on the euro dollar earlier on. We're getting in on the retracement, so we're getting in as close to the level as possible, okay, because that's where the larger flows are going to come in, that is going to move price, and they don't want to pay up, okay, they do not want to pay up. So when you get price trading in a range, that is going to be more random price movement than when you kind of, you know, close to a level. When you're close to a level, that's kind of where you're going to find your best reactions are going to come in. Okay. Okay, so I'm just reading the questions. Okay, so let's just step back a little bit. Okay, if you're having problems, right? If you're having problems with kind of noise in terms of, you know, what looks decent, what doesn't. Let's just say we've marked off some areas of support resistance. Now, you know, we've done a top down on this pair. We know, for one, we're at this key level of support here, the 886 area. It's also a completion of a Quasimodo. Now, Quasimodo is a head and shoulders pattern, which is a reversal pattern, okay? So the bias at the area for me should be only really long, okay? Because of the massive reversal pattern. It's not to say it, you know, price won't collapse. You know, we are kind of compressing here a little bit, you know, forming some sort of, looks like some kind of pennant or flag kind of thing here. So we could completely just collapse off here, and, you know, next week we'll be saying, you know, yeah, it looked great for potential buying opportunities, but the sellers clearly were in control. Okay, but I'll wait and worry with that, you know, when it does move down, and when it does move down and it closes kind of below this base, this area here, that's kind of when I'll start focusing on the short side. Inside candles after breaks of levels on smaller time frames. So I'm not quite sure if I understand the question. Inside candles after the break of a level. So if I have a level breaking to the upside, let's say we've got, let's just make it simple here, we've got a level of support here, and we've got this level of resistance. Okay, those are the only two levels we've got on the chart at the moment. Okay, so we are looking for selling opportunities and buying opportunities. So let's go to the 15-minute chart quickly. No, I'm not too phased about it. You know, as I've said before, I'm not overly phased about candle patterns. I'm always looking at a candle pattern. I'm not, you know, looking at it as a textbook type example. I'm looking at it is in terms of levels, buying and selling pressure, and who's in control. So if there's a big bullish candle, then, you know, when we close above a support area, then the buyers are in control to me. Now in this case here, obviously we've got this key support area here. We've come off this base, okay, and if I can give you a tip in terms of trying to draw these things, because it, you know, obviously it can get a bit on the messy side. Sometimes you'll have, you know, a real picture perfect consolidation, and other times it's just going to be absolutely horrendous. You've got two choices. You can either, in this case, you know, we have identified resistance up here, but let's say, you know, we're not quite sure where we want to draw the base. It's a little bit on the messy side, and we've got this area of support down here. This base looks far nicer because you can see the clear-cut top and bottom areas. And what you can do is just take this rectangle tool, okay, just take this draw object as background and just kind of mark it up in some kind of color, and that will give you a very simple way of just chopping through all this kind of mess. Okay, and as I said before, just get rid of those wicks. Okay, the wicks are just noise. So we have a very nice clear-cut base here, and at the top end here, so either we're going to use, you know, this rectangle tool, or very simply just move up a time frame. Okay, so let's just have a look. Just look at the 5-minute chart at this top area. Okay, look at the 5-minute chart in this. It's pretty nasty. If we look at the 15-minute chart, it's still pretty nasty. But as I said, look at the wicks, and the wicks are kind of what confuse people. But if you just chop the wicks off completely, you know, it makes it a lot less noisy. But if we stepped up another time frame, let's just look at the 30-minute chart. Have a look at that area there. Okay, how much nicer does that look? There's two very distinct areas or ranges that I'd possibly be watching on this one. The first one is this area here. You see this range? See the tight consolidation? If you look at the bodies, so we've got 3 bodies all at sort of the same number there. Then we get a bearish candle closing outside of this range, and then on the next candle we wick back in. That could be your entry there. Okay, alternatively, if you look below price again, you've got another very nice little range here. Come on. You see how we've got this area, we're chopping off the wick in here, and I'm focusing on this bullish candle. We close below, then we wick back in that area. With a stop loss placement, you'd still be okay. You would maybe be sweating it a bit with this big wick, but once we close, you see the retest of the range before we start drifting. Makes sense, guys? So if it's the range, if it's too noisy, if it's not clear cut, either A, step away from it, or B, just move up a time frame. Okay. And if we have a look, I don't even know what the hourly chart looks like. Here's the hourly chart, and you can very simply just trade these candles on their own like this. You see how you have a bullish candle, and then it reverses on the next candle. It closes below this bullish candle. Remember, we're chopping the wicks off, and then the next candle wicks back into the bullish candle. Okay, do you see that, guys? So once again, and using the same theory here at the lower end of the base down here, you could have actually even got in a little bit earlier, because you've got this consolidation here. Here's the range. We close. It's not very convincing. It's not a very convincing close, but we wick back into the base on this candle, and then we go up here. The base is just a single candle, this bullish candle. Then we close below, we back into this bullish candle, then we get another bullish candle. You see the base. Now there's 2 areas, 2 candles where we chop the wicks off. This is a much clearer area. We close below, we wick back into this bullish candle, and we collapse. Down here now we have 2 areas, or 2 ranges, 2 range based candles. If we got a nice close above, then we could look for a retest of this area. Okay, the same down The same down here. You see how we have this big range? Price closes below the range. It wicks back to find resistance inside the base before we take a leg down. Okay, make sense, guys? Cool. So that's essentially the pattern. Okay, so I call it a base or base trade. It can be used as a reversal pattern at key base of support resistance, or it can be used as a momentum base. In this class, I've just shown you the reversal pattern. Okay, so we're looking at key level of support resistance, and that's more how I trade it than a momentum based move. Okay, because I personally just don't like getting stuck inside the range. As I've shown you before, I look for price to move outside of the range and then take an entry. Okay, it's far more my comfort zone. Okay, let's have a look at that euro again. I think we've pulled right back on here. So you'll see in this case, taking profits at the 50% on that 79 pullback pattern would have been the way to go. You would have scored about 14 pips. On that, we've moved our stop to break even on the pattern at the 38%, and you can see the move down. Just on a side note, before we run, just have a look at this, guys. This is another base pattern here. Let's clear this pattern off here. Remember, we have, just step back. Remember, we have this area of support here from the daily chart with the larger 70.7. That's why I took the Gartley pattern, okay? Because it was at a very key base of support. So, where's that aquamarine color? So we have price at a very key level of support, 70.7, and this base from the daily chart. But just have a look at this. We've had the Gartley pattern, which we've played, but you see this, the consolidation here. We get these two candles, chop the wicks off, we get a nice bullish pop up, and price comes back, and now we get a move off. Okay, so the risk on this would have been about 7. You've already got your 1-to-1, and obviously you could possibly look for a lot more. So it's a reversal momentum based move. Okay, any time frame. Cool, take care. Right, guys, we're going to wrap it there. That's the hour done. I hope you found that helpful. As with everything, go and do your homework. Don't be lazy. And see what you guys can come up with. Okay. Cool, guys. We will catch you all tomorrow, I think. Take care for now.